And regarding to the current situation, what Dika was saying about feeling and not feeling and so on, I suggest, strongly suggest to you to switch to the daily time frame and the weekly one, guys. Don't stay on hourly time frame because you are not market makers and you don't need to put an order. Look, this is a fantastic seahorse. I don't remember what will happen with the seahorse, but Alex will say us what will happen, maybe. But seahorse is bullish or bearish? I don't know. Don't remember. Anyway, it should be bullish for the current uptrend. If I go to 1 hour time frame, I will see every move like this, like a drop. It's dumping. Ah, look at here. But let's be honest and analyze a little this kind of dump. It's not dumping. Here I have a line because I generally used to look at lines and impulse waves, but you can also do just trend lines with these kind of bands or ranges. And you will see that it's pumping and dumping on 1 hour time frame up too much. Let's go to 4 hours to see a little bit of less price action. I don't want to see these candles that are compensating one each other. Look at this kind of pattern. Why I should look at the market this way? Maybe I'm masochist. I don't know. Looking now at the market is dumping. Terrible. Well, look from here to here is dumping, but it's daily candle that is completely green. Look at the real price action here. These are 2 days that we are green. I don't want to look anymore at 1 and 4 and not 12 hours because it's not the standard and I have it. But maybe look at the 12 hours. If you want to see big candles, here on 12 hours you will have many big candles. But look at the daily, please. And look at the weekly and start thinking on your investments and tradings. If you are not trading futures, especially, if you are trading the current wave or the swing or the idea of that in 1 year you will see Bitcoin to 100K, don't trade on 1 hour time frame and say in the chat it's dumping. Of course, look, it's dumping, then it's pumping. After that, it will pump again, and maybe it will dump this way. And always take this fantastic measurement tool and see that dumped 3% of the price. And then let's see it pumped. You said that Bitcoin was dumping and today it goes for the double price. I don't want to see all of this, nor in compounding when I have to optimize my investment because here I lose money. I can fail on choosing the right microwave. I want to choose this way, this from C to D. This is my way to trade. So I will enter a trade on a safe point here and I will exit on a safe point here. And my revenue of this trade will be this one, 687%. But I will not enter, exit, because I will lose money. Also, if I'm very good, of course, I can do the bot strategy. Enter here, exit here. Enter here, exit here. I will earn much more money than a human. But you are not that way. And psychologically, this is a game that can destroy your balance, your mind, because it's continuously up and down. Look at how market looks fine, like a beautiful princess, when you see it this way. You will have drops, many weeks, of course. Look, let's take out everything. Look at how many weeks, but look at the nice market here. I prefer this market rather than yours that is on 1 hour time frame showing me seahorses, black swans, and many other kind of downtrend that is on an uptrend. Days ago, I saw on Twitter a consideration. It was the rising wedge is forming an ascending rising wedge inside that is forming another ascending rising wedge inside. But what happened? I mean, I don't care about all of these rising wedges. Dikra was spotting the correct idea. Market sentiment. You do your market sentiment. Maybe in bull market, people that are really affected by sentiments could lose money because they are entering and exiting the same way. This is a bull run. How much people lost money here? Consider that having a view like this will not prevent me to spot something strange. In example, let's do one consideration. Here I will just draw some of the main rectangles that I will then remove. Now look at these two rectangles, I will remove them, and let's see that these kinds of shape could be also this one a little bit higher, so uptrend, but replicating, and we could fall here. Why not? This could be the peak. I can see this option also on a daily time frame. I don't need to be on an hourly time frame. On a weekly time frame, the same. This could be the peak. I could have been reaching the top and now going down. But it's a week, so I need 3 days and 2 hours more. I can go fishing, go eating with my wife at dinner, go running in the gym, because there's 3 days and 2 hours to decide if this will be an up or a down. Don't trade hourly. It's not for you, it's not for people, it's for robots. If you do that, you will pay the worst fee, that is losing money, because it's natural, you cannot avoid that. And it's sad, because we are talking of this continuously. Do this, not just listen to this, do. It's so easy. There's no analyst that can give you the truth. There are no people like me when I say we are going, I would never say we are going to 52. An option is this one. The other option is the bull market. The other is the bear market. Everything is an option. Who claim to say that we are going first here and then dropping down, consider it's a different way of expressing a concept, but no one has the truth on technical analysis. And if you look at professional analysts, they will have a bundle of people, an example 10 different analysts, and they will say the high estimation is, the low estimation is, the average estimation is for 1 year investment on this asset. You will never have, this asset is pointing to 100K. No, because it's not. But you will never have this asset is pointing to 100K or 9K or 50K, because this is logically what you can deduce alone. The good analyst will give you the shortest range. I mean, if you ask me to say what will happen on 5 September, I will give you this range of price, and I will say high estimation is 54, mid estimation is 49, low estimation is 43. And you can say, why 43 and not I don't know, 37, because I'm following my research. That is this wave, this combination of waves, let's say not until that, but until here. So my wave finish here and up here, or in the middle of the average of the two is here. So I have a high, an average estimation, and a low one. I will never say we are going here because it's a bull market. No, tomorrow everything, I said, an asteroid could impact Earth and destroy half of the planet, and we will go to 9K or 0 because there will be no market. terrible thing. But also, someone could enter the market because it's a rich man, like an actor that decides to enter Bitcoin for the first time, and it will be doing that with $1,000 million. So the market will go to 1000K. You cannot really be sure about forecasting. We have ranges. It's a game of probability. It's not a gambling game. And it's something that is never perfect. If you add the Bollinger Bands, you will have something very important in statistics, that is the standard deviation. So adding the Bollinger Bands to my charts and changing, look at how different can be an indicator when you change the standard deviation. I mean, what is effectively called a statistical formula to get the results. Let's use these Bollinger Bands with standard deviation 2, and let's see the results. Zooming, I see that I have the lower red band here, the upper blue band here, and the middle band orange here. So now I will change the standard deviation to 3. And look how I will put emphasis on the lines. Look at how my result is different. It's the same indicator, but it's indicating me that overbought is here and oversold is here. If I look at these Bollinger Bands now, we are going to an overbought direction. So we are going up, not down. Let's change that again to 1 to go for a little range. You can see that it's a different result. I'm just changing the parameter of a statistic formula, and I am having the low estimation on overboughts, and the high one was the third, which is here at this price range, and the average, of course, is 2. So just looking at simple indicators like the Bollinger Bands that are related to range of probabilities and to capture range of high and low in terms of prices, overbought, oversold, quantities, price action, markets, and many other things. You cannot have the perfect spot. You cannot say, now we are going to 46. We are talking since about 2 hours and the price is still frozen on 46.4. So it's not moving. But if we go here to your favorite timeline and time frame, look, we are getting crazy. No, it's not possible. Let's go to 1 minute. Why not? Are you serious? So let's go to 1 minute. And look, it was pumping so high that was all-time high in 1 minute time frame, and now it's correcting. It's incredible. Don't do this. Don't hurt yourself. Go for something relaxed. Trading is a nice opportunity to be rich, to increase wealth, and also to be a nice man on your life, not just a technical analyst or a man that is perfect in spotting the right price. No, it's giving you the opportunity to control your mind, to be relaxed when all the people are scary about the price move because they are looking at 10 minutes time frame. Take the starship and go outside of the planet and look at the weekly time frame and see the earth in all the shape. Don't look at the little stone in front of you. Take off. That way you will trade, you will be understanding that your investment is something that is long term. You cannot earn 100% in one day. I mean, you can. If you are very lucky and you spot the right moment. but it's not something that you have to search for, because it will be something that maybe will appear once in your life. While trading for 1% each day is something very achievable, also from people that are very emotional. Just learn to control your emotions and you will see that everything will be fine. What will happen? We don't do. We don't know. Maybe this peak is the central one and I'm drawing three, but they are drawing five, but they are three, and we will go down. There's another point. If we are going down and you don't hit the sell button, you will be locked in a position for many time. But if you exit this position, you have to know that you have to be able to hold your money in your pocket until the real bottom. And you know how hard it is to forecast the bottom. Because the bottom will be here for you, will be here, and you will still lose money also exiting this position. So in that case, don't exit. It's a loss. I know that you shouldn't, but it's better for you. It's for your safety, for avoiding the loss of too much money. Because if you exit here now or whenever you want, you are going down. Okay, we are here. I'm losing. I bought at 45. Okay, you bought at 45. You are losing. Wait. But I will lose more here at 33. Don't look anymore at that asset. You lost because you hadn't to buy at this level, at 45. That was no buy level. You failed buying, not holding. So now hold. Hold until 9 and wait for the price to come up to 45. It will be better for you to forget about the product and to think on very long term, because it will avoid you major losses that we can easily spot from a different point of view if we look at the weekly time frame and we look at the people investing on Bitcoin here at the highest point in this market at $13,000, and look at them now. Also here where we are now, they are earning 400%. Be that people, that bundle of persons. Don't do the one that buying here was selling here and buying and selling and reaching here the end of the market without money to buy the bottom. So if you exit here where we are now because you are losing, prepare to hold your money in your pocket. It's better you leave them here. And eventually, when we are at the bottom, do that other bad but not so bad behavior that many investors use in their practical strategies. That is buy the dip when dropping down. I mean, I don't know where is the bottom. I have $10,000. I will start putting 2,000 and a half here on 28, and then we are going more down. I will leave those 28 there, and I will put half of my investment at 23, and we are going down the more, and I will put the 25% that I have on 12, and at 9 the other 25, and then I will wait to go up and take profits, or just waiting for 1 or 2 years for my money to become 4 times what I invested, and maybe much more. But don't do that game of the man that is looking the hourly time frame, because you cannot be rich in one day. I mean, if you know the big market makers and they say, do this because we are supporting you, these are the entry points, no one knows the real entry points, because market can change. Don't pay for services that are saying you that they give you the perfect entry point. There's no perfect entry point. There's just research. We know when to enter, but we approximately know when to enter. We have to reduce the probability of doing mistakes. So the best way is don't trade in this rectangle. Then you decide. You are all invited to comment and share your ideas. If you are alive, of course. I don't see people alive. But there are many people alive, so talk. Take the microphone and talk. Say something. Say, Fab, you are crazy. Go find a job. I already have one. Let me know your opinions, shares, sensations. Fears. I think that I don't have more suggestions for you because we talked about everything. We also have Dikra spotting the dollar parameter in the market. It's very important. We have Ethereum which is complying with this crazy shape. The idea of using daily time frame. Be interactive. Say, no, I want to use the 1 minute because I want to harm myself. And I will know that you have masochistic tendencies. It's something that is, in this world we are so different and in many ways we think about it, so no problem. But at least I know that when I talk to you, you have that kind of tendency, so it's normal for you to look at 1 minute time frame. Look, it's pumping. We have soon an all-time high. Nice. It's really nice to see the 1 minute time frame. Let's stay for 1 minute time frame for some time, just to see that finally, look, this trend line that is here, the yellow one, I don't remember when I drew this line, but it's an impulse of the Elliott wave unique with the blue one. Is effectively incredible how the 1 minute time frame is following this line, but going up or down, up and down. So I will exit here, I will sell, buy, sell, buy, sell, buy. Crazy. Like when you go on the boxing ring and you go in front of Mike Tyson and you have one right and one left hand, one right hand, one left hand, until you fall down without money. It's real. Look, it was red, now it's green. Where is my red candle? Comment, please. No comments. I'm alone. This planet. Hafsa.
Hi Feb, how are you?
Fine and very happy to hear your voice for the first time. So you won the shyness.
I just woke up and I logged in my computer and I'm in your class, but I'm cooking my breakfast as well. So yeah,
So this is not a class
and
video. It's a
yeah,
share.
thank you very much. Thank you very much for doing this. So helpful.
That's nice from you. I know that it's something that everyone here is feeling the same, and me too. I say thank to me for doing this to me, because you are helping me to improve my technical analysis. I have foundations, but I need your sentiments, because sentiment is driving my life in everything. We need that. So what do you think after
Yes.
about the evolution of the current market?
I think it's gonna. I have not looked at the charts yet, but I think it's gonna go up a little. Maybe until 47 or 48K, and then we'll see from there what's gonna happen. That's what I feel.
Nice. As you can see here, there's a rectangle that is exactly 47, 48. So you are in line what we think globally, because it's that rectangle I drove there because it's something that I collect from many people, the same numbers.
Yeah, like
Regarding Ethereum,
Hey Fab.
hey,
Hey, I'm at a tennis match. I'm watching my kid play tennis match right now, but I'm trying to do both at one time. I missed everything about Bitcoin.
no problem, it's recorded. So just time to edit the video and split in one or two or three parts, and you will see that on YouTube.
Okay, cool. I guess my quick question is, do you I didn't see this whole video, so bear with me, but do you know what Amal is talking about whenever the Black Swan event thing? Is that feasible?
Let's see. The Black Swan event is one thing. When I opened my Telegram today, there was a link to my name in the Amal message talking about the Black Swan indicator or pattern, which is this one. This red one is called the Black Swan pattern in Elliott wave. Now, the Black Swan event could be what we talked with you, Justin, one-on-one about the new lockdown in the United States or something like that. But I think that we have to consider that if United States goes for another lockdown, it will be not so intense like the first one, because people will not panic selling because they don't have money. They already are, let's say, prepared, or they are experienced on what a lockdown is, and it will start with a different way of people approach, let's say, to this kind of events. So I would not say that it will not affect the market. Why not? But maybe it could affect the market positively, could try to bring more people in the market. So it's something that we have to observe in the news, in the current evolutions. I also shared with Dikra and Alex in Dutch a news that was on Europe. That is practically that the AstraZeneca vaccine is failing, and many people are getting infected again, and 30 years old people are dying in Europe. So everything is possible. We discussed this in a previous video that we had, and it's more oriented to what is happening worldwide. But also worldwide is happening that yesterday we had a bloodbath on futures contracts. And when I saw that, because they said me, the markets are falling, I immediately, when I see that kind of bloodbath on stocks, I immediately go to check the prices to enter positions, because it's a great opportunity. And I saw that the market was green, but the future contracts were red. So many people are losing money on futures, on CFDTs, and so on. So what is the real consequence of that kind of activity from markets, investors, and people? That tomorrow is the third Friday of the month, so options will expire, and it will be a out. We can be winners or losers. If we are losers in options, we are liquidated completely. There's no margin or other things. Generally, If you are not successful in a trade for 1 month of the market in options, you can lose everything. So tomorrow there will be people losing on the future markets, not just in crypto. Maybe in crypto they don't expire because we have perpetuals. But in shares, the buy is a put, the sell is a call, and there are different ways of trading that effectively are during this week crashing on that side of the market. So it could affect the availability of investors to put money in crypto generally because they do differentiation. So if they lose from one side, they take from another to balance or vice versa. Now that could be affecting the flow of money inside crypto tomorrow. But until tomorrow, we have an option. The Black Swan event as it is, we should isolate the two ideas that you could have. One is COVID, the other one is Afghanistan, and we already heard about Biden saying that he will not go to another war or to send the army there. So, with these kinds of, let's say, basis or parameters or arguments, what do you think about the black swan? Because I show here, I've shown the black swan pattern. This is the end. Is a black swan pattern on Bitcoin. It is there, and on Ethereum too. But in terms of geopolitics, what would you be scared about? What will be your fear regarding the black swan? Yours and all the others that are here can comment too. Let me know your main fear. Hey Victor,
Hey, good evening, all.
good evening, good night, good morning.
Sorry?
Good evening, good night, good morning. We are
Yeah, we
wherever.
take the good. Yeah. Listen, I just want to ask a question different from the topic. And it's something I asked Amar earlier. I know it has to do with a personal decision, but you being that you don't hodl, you practically buy and sell. I do a little bit of trading. I just started recently. I'm into more of investing. I buy, I hold for long term, 6, 7 months, eight, and I sell, and etc. etc. Now with the looming or the predicted the incoming crash. Now I was asking, uh, what do you think is best? Do you sell your hodl back at minimum loss or minimum profit and then buy the dip? I don't know. What do you think is the best approach to it? Because if you have to hold hold all the way down to the bottom, and then it means you have to wait all the same. If it takes a 1, 2, 3, to recover for you to come into profit again, and sometimes it hurts, seeing your bag and seeing you minus 50%, 70%. It sucks. Personally, what do you think is the best approach? You sell at the top and then you buy the dip, which I think is usually the best. But if it's a project you believe in, you think it's gonna grow, do you still advise selling and buying at the bottom or just hold?
I see your question and I say it depends on your way of feeling the trades. Because if you are able to resist the FOMO and many other sentiments that are related with many people investing in the market, if you are a good trader and you are able to avoid the problems, I will tell you how you would proceed in this case. So the first one is that we have a line. That is, the market is going up until here. But it's not just going up until here, it's going up and down. So if I buy here at the right point here, and I buy again here, and I buy again here, I'm doing a correct way of entering the market. But if I'm buying here, I'm doing a mistake. So the point is, I shouldn't buy when a green candle is rising and I have a green market, because it's a bad behavior. First point. Second point, you want to be sure that you enter lower positions. So this one was something that you didn't buy, you didn't bought because you thought that the lower point was 9k. At that point, we have another kind of strategy. You will not enter the market until you have 9k, if you believe in your strategy. If you are just waiting for 9k because Fabrizio said on the chat, or because other people said, because I don't say just 9k, but I also say 100k, everything is open. You have to think about your strategy and to think about how to manage your investment. So if you enter here, like we were saying, you can sell here and enter again here and sell here, enter again and sell, and do this kind of activity, which is named compounding, each time. While selling everything, you will just sell the profit. So if I buy one here and here I am 1.2, I will sell 1 and hold 0.2 and leave it go. And then when it dumps here with the one I took here, I will put another one here, and here I will have a 1.8, and I will sell the one that I put here, and it will be 0.8 here, and eventually will compound here, and so on. There are many ways that you can approach this problem. Now, if you buy here, it's an error, a mistake. You shouldn't buy here, never. And if you buy here, you have this run to comply, so you can, why not sell here at this point? You can do that. It's a fast trade, but it's not a long term, and you are talking me about long term. So about long term, your concern was that if we dump and you bought here and here and here, now it's going to dump, what are you going to do? You can sell minor profits in this point, why not? Okay, where we are now, or maybe here if we go here. After that, you will take minor profits. You can close all the positions because you just want to exit the market. Generally is what I do personally. I don't maintain lower positions once I already took the profits. So if I did this kind of compounding, here I will close my whole positions because I will exit. And I will not be in a hurry to enter again because I have the wallet full of dollars. I will just wait the occasion to go for that. So as I explained when starting this video, I will short here, not here. Here it's a crazy short because it can go up and be a bull market. So if I want to enter short, I will enter short here. If I want to enter long, I will enter long here. But absolutely, I will not act in this rectangle because this is a decisional point. I don't know where the market is going to go. I absolutely ignore the sentiment that will drive the market up or down because I don't have the crystal ball, and also because market is alive. It's not something that is dead and you look at it like some, I don't know, tomorrow we'll have an putrefied because it's dead and this will be the decomposition. No, the market is alive, can be down or up independently of the shapes of the patterns. It's a game of probability. So the strategy, once we are here, if you decide to sell a part of your investment and maintain another one, you have to be prepared to go down with this part. Now, how can you manage this? First of all, you have to consider your balance and the fact that if you put money in an investment, it could be for 2 and 5 years. Otherwise, you will be swing trading and not long-term investor. If you are a long-term investor and you buy here at 46, you are buying a little bit high, but if the market is going bullish, you are fine. So you are considering that here you are setting, let's say, a bid on what will happen on this point. As I told you, this is a good investment. This is a good short. This was a limit good long. Now it's nothing. If you are in these positions and you are fine with this position, you maintain this position. We are going down. Let's consider the down now. We are going down, so weekly time frame, it's better to see the down and to spot more range. We are here up, so we are going down. Let's remove everything. Why not? We can also consider this and just add the down like this. So at this point I have positions in this range, another position in this range, maybe another both, why not here, something both here if I was in the market, here, and still there, everything left. So I could sell here as I set early the evidence, but I can also avoid selling and I will go down. What I will do is this money will be there. I will not touch that money because if I exit with that money, my loss or my gain will be eventually this one. But if instead of going, I'm not here, so I cannot decide. And if the bear finish here, I just recovered nothing because what I will win again is exactly the same. So in this case, hold the position and eventually save money to buy after the lower position of yours here. And maybe if we go here, buy here, if we get in this point. If we don't, it's not your problem. You are maintaining positions and eventually consolidating here one, or why not here one, or here when we go up. But it's just a matter of understanding that if you exit a position, you have to own the skills to enter and exit when it's a must to do that. So it depends for that reason on your skills. If you have the skills to exit here and then enter here, exit here, enter here because you are not sure about 9,000. Never. You could be sure about the probabilistic 20 to 26, maybe, and so saving money for this. But what about if we go up? You will be saving money to enter an upper position. You will have sold sold your complete portfolio here, and you will be at the point that many people are. I lost the train, on I get down from the train and now the train is far and I have to take another train. Fine, take another train. It will be cleaner. It will be something that you understand better, that you enter a position after a risky rectangle here. So what about the risky rectangle? Every entry position has its own risks, obviously. But there are probabilities that if you don't enter when the market is on a decision point like this one, because in terms of technical aspects, these are five inputs upwards, and this, where we are now, is a correction wave. During a correction wave, you can experience falls, change of trends. Now the trend is an uptrend on Bitcoin. And you can see that just using the strategy that I told earlier. Daily time frame. This is the starting point. I have here a higher high. I have here a lower high, higher high, lower high, higher high, lower high, and so on. This is my uptrend. If I want to use tools, I will choose the regression trend from here, which is this one. I will just take this tool and set from the starting point of the trend, drawing the tool up to the end. And this will give me the current direction of the trend, so I will not fail on a daily time frame, from the starting point up to here. And if I'm curious and I want to see how is the trend looking like if I start from the dead cat rally, it's an uptrend. To find the downtrend, I have to go down to 3 of March, I think. I'm not sure, but yes. Here I have the downtrend from that point. So at the moment, at these real conditions in the market, we are going up. So I have to beat to my strategy because I always have to take a decision. The trading is not wait for the down or wait for the up, because that's not trading. That's just waiting, and you will lose money waiting. But you have to, let's say, find the best compromise to enter a trade, to avoid enter when it's high, of course. It's quite obvious that if you look at this chart, that is a daily chart, but you can look at it like a weekly chart, why not? And see that on this weekly chart, you are still going up. You could buy here because it's a red candle. So you don't do a real error if you think weekly. But then please, you will be back in 12 weeks, not tomorrow, to check how is it going, because you started the trade or an investment on a weekly basis. So 52 weeks, 1 year will be your target to come back and see how much is your revenue, not tomorrow. You cannot trade tomorrow entering weekly time frame. If you go for daily time frame, you will come here after, let's say, 180 days, 6 months, because it's not possible to earn each day something. You can, of course, look, here in 3, 6, 9, 10 days, one could have been earning about 46%. And what about the people that bought here and they are still in here? Very nice. They are just earning at the moment 60%. They shouldn't be worried about this. Exit the position while maintaining, because you're greedy and you want to go to 120%. No, consider this. If you exited here at 64 and enter the game here because you have skills to do, you will be earning 64 plus the current range, which is 7. So 71. But do you have the skills to do that? To exit here and enter here? If you don't,
No.
for that reason, I don't. Personally, I don't like to do that kind of trading because you can fail. I know that I can do, and sometimes I do that, of course. But to be sure about my trading system, I have to comply with many rules. And in my rules, there's the exit if you want to take profit or close a position. Don't bother about entering again. Take some rest, go fishing, go whatever you want, and do whatever you need to do. But think about what you earned and not what you are losing because you exited too earlier. So if you exit here and Bitcoin is going to 5-1, consider that you exited on that rectangle that was your safe point. A little bit higher and a sudden drop with the Black Swan event will completely burn out your wallet. So you did not a mistake here exiting the position. It was perfect. Nice. Now I exited when I can enter again, but it's something that the doctor said to you to do, to enter again. It's something that will prevent you to be sick in some kind of sickness or illness or whatever you want. No, you don't have to enter a trade. It's not necessary to enter a trade. You can also stay out from the market and do whatever you want. So don't bother about enter, exit, entry point, but bother about rectangles that are your safe points, checkpoints. This is a checkpoint, effectively. Look at how wide it is. I take my risk in a wide range. I start from 43 up to 52 or 56, 55 for reasons that, in example, are in line without discussing earlier with Alex lines. Alex told me about 55, 49, and another lower band that is very low here. But let's say that the higher range is in line with Alex, with a golden ratio retracement from Fibonacci here, from the top to the current lower point of the downtrend. So let's say I have some range, some checkpoint. It's the only thing that you have to do. I set an arrow here because this is the perfect point to exit all the trades. To me, if we go here, all the position related to the altcoins, Ethereum, Bitcoin, will be immediately closed here, completely. Big profit, exit position, count money, print money, go to have a dinner, go to have a travel, whatever you want, but here will be stop. I will not leave absolutely nothing, anything inside of my wallet or my trades. It will be everything inside my pocket because this is my reaching point. This is my stop for this uptrend. It's something that I managed for this market since this point, more or less. So from 21 of March of 2020, I took profit on these points. At this point, I will close all my positions, including selling Ethereum, Bitcoin that I bought here. Also, I bought them at $44,000. They are completely burnt. I don't want to hold anymore here. I will close my position, exit the market of Bitcoin. For many reasons. Because it's boring, because it's becoming too linked to big institutions and too manipulated. This is something that is in this last market is very effective. So I don't want to stay in this market. I will go investing everything in alt markets or in stocks maybe. I don't know. But at this point I will get out. And I will not think about entering again now here. Maybe, why not, to be honest, here. When I see that the bull is confirmed, and of course, I will not lose the point that if we go on some of these points, this one and the other one here low, that is related to to my, let's say, lower bottom, I cannot reach because I'm on a too high time frame, but it's about a $9,000 Bitcoin. So if I want to enter the market, I will do in two positions here. Maybe this one I will not take it, but why not? Generally, you shouldn't buy in a downtrend for going up, but buying here is a low position. I will count money because I will be exiting a big position from more than 1 year of investments, and so I will have the capital to decide to put something here and a little bit lower. And this is just a market cycle. Look, this is a crucial point. So probably I will not put money here, but I will wait for these points because I believe in my strategy and I think that if we drop, we will reach this zone quite surely if we drop. But I don't know if we will drop or not. This is my plan A. My plan B will be if we go high here, maybe I will enter a position. And I will do, in that case, I will consider more indicators because it's something that you have to be sincere. It will not be something that you will do in one shot and go and so on. You will have to consider, in example, more conditions as indicators, like the previous editions, the P cycle. Here is a cross. So this cross should comply with this other cross that was from the previous cycle, and when it is the point to enter this market on the next cross with the price of the moving average 200. So I will consider these points in this case, but at the moment we are just at this point more or less. So I'm not interested in consider all the options for the future or the bull market. If we change the trend and we go up, then I will take a decision.
So I appreciate you, Fab, as always.
Thank you. I appreciate you for being here and also for the questions that are related to your investments that are also very important because I understand how you can react to the market and understand that maybe suggesting a lower time frame for you to look at, an example, the weekly one or the daily one, could be helpful to avoid spending so bad time when having a trade. I know Link has a different asset from Bitcoin and the other generic assets that we trade, but it's everything like the same story. So I think that your efforts and what you do for us and for me and for you also is very important. So keep doing it. Don't worry to ask and ask for confirmations because it's how we can improve together. I'm not the master. I'm just sharing my view because maybe I have more experience and more secrets to avoid being trapped in the market. But I don't have the right answer on where will the market go. I can estimate points with you and your views, with you all, but it's important that you preserve your wide view, your capacity of going for a strategy that is bullish and another one that is bearish. And eventually you have your strategy for swings, for waves, but in the long run, Bitcoin can only go up. So you can just think in the long run that you put money and in 1 year you will have 400%. If you look at daily, don't trade Bitcoin or crypto because it's very hard. You can trade futures looking on daily, but it requires skills too. So do with the guys that are more let's say, involved in that, like no one fast. They are snipers for futures. And if you follow a trade that they enter starting from 10% or 20 or 30%, when they close it at 200%, you will be earning 150%. So it's not bad. And you will be learning many things related to the platforms, to strategies, and many other points. But if you want to trade spots, just enjoy the spots because you are buying something that is yours. It's like buying a car, like I don't know, an old car, a vintage car, completely destroyed. Then you put some money on that, and when you go to the market with the auctions for vintage cars, you have 1,000% more of what you spent because it's a car that is beloved by many auctionists or collection men and so on. So it's that the point. Enjoy the spots without thinking about exiting because you are on loss. You have your assets in your hand, in your wallet. So you have your Bitcoin. If Bitcoin is going down, it will go up again. It's obvious. It's the market. It's always going up. Maybe in 1 year, but if you are investing not for living, you are not doing a day trading for life. So in that other case, we should talk because if you are doing investments to live, then the strategy of holding and going long to create capital is not correct. You have to learn other kinds of investments, possibly on forex, and go for indices and trade day trading and swings and fast to earn money with strategies, bots, and indicators, way of optimizing your wealth and your way of trading. But if you're doing crypto on spots for to see in 1 year how you can grow your capital, it's a nice strategy. It will be paying you money if you just avoid exiting and entering because you see red, and it will be nice. It's another strategy, but it's not day life. I mean, you don't have to live with the trades. You just use the trades to increase your wealth, your capital, and eventually one day to retire, or if you are already retired, to consolidate your retirements and investments and to differentiate after real estate and other kinds of things. But do it as something relaxed, because if you invest today in I don't know, link, and tomorrow link is down 50%, don't look at that. You haven't you don't have to look each day to an asset. Look in 6 months. You will see that in 6 months you will be earning money because it's that way. I know crypto is very hard to digest when you start, especially if you look at the fact that many people will say, I am 1,000% in the previous market. Yes, in the previous market, not in this one. In this one, we are not earning at the moment because we are in the first phase. The previous market at this phase was here, and people sold in here had the opportunity to buy Bitcoin at $3,000, and now when they sold at 64,000, look, if you had 10 Bitcoins here, just $30,000, you sold at the highest point and you had $600,000. So practically you were from normal people, from average people to savage people, as you said. And it's something that required some time, from March 2020 to April 2021 is 1 year. But if you were exiting and entering the market because, oh, it's red, I lost, wait, I will exit. then you will be selling here just one Bitcoin because everything was lost. 9 Bitcoin in this path. It's not good. So if you enter a position low, it's your secret to win again. And the market will go crashing maybe to 9,000, but then it will go to 100 because look at how it performed in the past. It went up, then crashed here, almost at where we started, here and here. And then after a cycle that was about 2 years, because it's 400 and something days, so it's not 2 years completely the halving of Bitcoin. After that, in 2 years, you will have Bitcoin at, let's do some imagination here. Look, $2 million. Too much, maybe. You have to go for logarithmics. But this is the concept. I mean, you can imagine that following this trend line that is here, we can follow this line and consider that at this point in 2023, we will be at this point 200, low estimation, $200 Bitcoin. It's enough to say that you bought at 40,000 and you have your Bitcoin at 200. So not bad. This is the point. Look at long term and be patient on everything, also on altcoins. Look at Sol. Sol was starting a red candle. My estimation for Sol, don't trade it, but my estimation for Sol is $93. I published this when Sol was here on internet, on Twitter, and there are people believing in my strategy that are saying me thank you for 74, and they are believing in 93. And I said, I don't believe that 93. It's too high. It's the Fibonacci 1.6 revenue. It's risky. It's too high. Take your profit here. But they are believing in that. Incredible, like people believe in my strategy and I don't. But this is a real case. Look, this was the all-time high in May of this year. I mean, look, this is the all-time high of Solana, and this is now the new all-time high just 3 or 4 months later. So it is possible to spot this kind of business. Why not? And it will be more each day and each month more on each altcoin, because it's how the market is perfectly performing and transforming now its shape for crypto. Considering that, don't sell. You have, if you buy spots, of course, if you have futures, think about futures, but don't sell your spots. Believe in your spots because they are a really good revenue for the future. And it's not a one
They are.
future. Yes.
I was just gonna say that I agree with you, but I just want to sell enough of them to get back into Bitcoin. To be quite honest, too,
Yeah.
I want to hold some Bitcoin to gain interest on the Bitcoin is what I want to do right now too. So in order to do that, then I got to sell some of those spots, and I just want to sell them above. If, you know, I mean, obviously everybody wants to buy low, sell high, but so I just want to put some of that money back into Bitcoins. Why I'm trying to sell some of those, to be honest, because I believe in Bitcoin a lot.
Yeah, it's not a bad idea because, as I said many times, on November we have the upgrade of the code on Bitcoin, and it could be really something that people are not believing it could happen, but it could change the view on many market components, assets, and things like the altcoins and everything related to Bitcoin, because ADA, XRP, Ethereum, and many coins that are infrastructure based could lose that, let's say, leadership that they are gaining now because of Bitcoin having its own infrastructure and being another time competitive on the whole crypto market, smart contracts and many other things that they can accept after the consolidation of their own infrastructure. So investing in Bitcoin is good. If you want to wait for the correct entry, I suggest you do with what we consider that rectangle. I mean, if you bought now or you are going to sell your altcoins, it's a hard strategy because you have to believe that we reach at least 49,000 in Bitcoin. I mean, you have to have a starting point. You cannot say, I sell now to buy Bitcoin, because now you could sell on loss. If you are winning on every trade that you have on spots, do for that strategy and save money. But if you are disposed to wait for Bitcoin at least, let's say, 49,000, low estimation, or why not at this point? We know that this point here is already history because we are higher and we need 10 minutes to close the daily candle. So if this level is lower than the current candle, we are an up move on this point. Generally, so we will have a peak here. If we close red like this candle and we have the same kinds of move here to decide to exit our spots at this point to prepare for an eventual drop of Bitcoin. It's a very tight strategy, very risky, because you could fail and it could be just an opening candle or a bad week for traders and so on. You are not waiting for so much confirmation, but starting a strategy that is based on spots and on the fact that you believe in Bitcoin. So being your financial advisor, I'm not, but trying to give you a view on what you could do, I would say, look at this, let's say, pattern price action here. It was something that closed from here to here this way. So we can think about the same move this way, and let's see the next candle. If it's a green candle, we will wait because we could go at this level. But if it's a red candle and I see tomorrow in 24 hours plus 8 minutes that my action is red and it's here, it could be something like this move, and I should be trying to buy the upper point in that moment. So it could be also this way at 46,200. So at that point, I should sell my altcoins if I'm in profit. If I'm in profit here and I want to do that entry on Bitcoin because I believe in Bitcoin, I should sell now. But I can also decide to risk a little, like the stop loss. And I decide to set a margin that I can risk and lose, which is, in this case, should be very tight. Let's say that 5%. Let's consider that 5% is too much. The 3%, the length of this candle without wicks, 3.89. So if something drops, I will lose my 3.89 potential on Bitcoin, but I will sell everything that is not on profit but is on loss on altcoins to prepare my entry. First point. After doing my, let's say, money collection on alts, I will prepare my strategy on Bitcoin, and I will decide if I want to wait for that possible potential Erson and fantastic idea over 9,000 here on October. So what would I do until October? Are you able to go to the game and not trade? You do. If you are, no problem. You can do this way. But consider that there's a long time where you have a no trade action or a risky entry here. Why not? Another one here, another one here, and finally, if you go there, the risky entry here. And this is a strategy in case that Bitcoin will tank. I mean, this is one. If it will be go up, considering my previous considerations that I will search the various rectangles now that are related to an interval of time that is like this one should be. Let's see. Yes. No, they are not. Yes. So these cartoons can go. We don't need them. Let's prepare everything to consider the current situation, like earlier, like we were discussing and starting, and consider that we are on this green candle now, daily time frame. Always daily, don't look at hourly because it's useless. You are thinking about buying Bitcoin. Bitcoin has a cycle that is very long. So daily. As you can see, we are reaching my zone where I should think about, I thought about this zone, considering the previous pattern, for the closing level of the candle. I'm currently failing of this little range because I had the wick, but the candle is not closing there. Let's see how we close this opportunity, and let's see how we open the other. If we replicate this pattern, I have many investigations here that are related to just a little strategy, a little rectangle, that we have another candle, and if I see that my candle is closing or going here tomorrow, I will not sell my stocks, my spots, because I know that it's going on, it's going up and can reach my higher point. Case A. Not the higher point ever, but one case, because the higher point could be also here on 24th of August. So I have to follow this rectangle that is the red one here, and that I drew as my, let's say, range of opportunities to decide when or not to enter a trade. As you can see, it's wide because it's from 55 down to 43,000, but it's the non-risky area. I don't want to take risks inside this area because I'm thinking about an investment that will stand up 1 year, and to me it's important to choose a range between $10,000 up or down to avoid lose $10,000, which is what I don't want to lose. I could risk an entry here for long or a short here for short, but I don't want to take those kind of risks because the revenue for that risk is about 6%, and I consider that risking 6% should give me at least 12% more, while I earn just 10% more in terms of numbers. I don't care about saving 6% up or down. I prefer a safe entry. So a safe entry to me on a short would be here, after the confirmation that we are going down. It's way here, but it's just say 6%. Don't think that it's bad to enter here. It's safe. And you have way down all the shorts that is very long. The first checkpoint with 30% revenue if you short, And here you have the complete, not 82, because 82 is when you start here. I don't care about 82%. I'm a man that is fine with 72%. Then left. So I enter on this point. Look at how different can be. The range at your eyes is very wide, it's quite a half, but the money is just 10% less earning. If I do the same thing here to the higher points, in this case it's 20 against more, but it's something, there is a range, 48%. But first of all, to get 48%, I need to start here, which is 22 of August, and I have to stay in the trade until September 29, 1 month. While if I enter here in my safe position, I will say way less in the trade, and I will be happy to avoid FOMO and many other things that are related to the trade, because I will earn the less, the half of my trade here, 20%, but the trade will stand from 18 September down to 26, way more, and it will be a straight line, not an up or down for 3 times that will be getting me crazy. So its strategy is when you play chess, the same thing. You can eat the other opponent's king in 10 moves, but if you eat it in 2 with a tower or some kind of combination, and you go for checkmate in 2 moves, you will win the context easily and not being affected by all the peons that are killed in battle earlier. So it's like a chess game. Choose the fast way to earn money, no matter if you earn 20 instead of 40. But remember that time is money, and to earn 40 you need 1 month and a half, while to earn 20 you just need 10 days. Better to go for 20, seems early. If you want to enter for a long, you will wait to complete this phase, because until we exit this sequence of waves that is not here, I have them a little bit lower, but not so important to see them this one. This sequence of waves that is bullish and that could continue my trend starts here at 45 after the retracement. So I need at least to exit these 5 waves to know that now I will have a correction, and after that, at this point more or less, I will enter the famous train up. So basically, if you look at this point where I decided to enter the trade here for a short, in terms of time, I will enter a long here. So it's symmetrical, not searched and researched, but my entry will be around 55, 57, and the short will be around 34. And I have 2 ranges. These 2 ranges are my way of trading. What I'm losing, again, once more, I'm losing on a long 20%, on a short 30%. No problem. That's not a loss. It's just risk management. I don't want to risk 30% of my money and exit a short prematurely, because if I short here to go to 9k and I exit here or here at 46, shorting at 51, I'm doing the game of that one that is crying and short and exiting here, but could not have been taken that decision. So the strategy you have to follow and to elaborate like a game, you have to study, to plan, And the secret is also to share your strategy with others. Also, when people said to you, it's going down, I said you that it's going down, you didn't listen to me, let them do their way. They are using terrorism, psychological terrorism, to say to you what they are thinking about. But just catch their numbers. So if one say to you, we are going down to 42, after tomorrow being up to 47, write those numbers. Don't care about how, where, the way they told you those numbers and how they share their research. It's a bad way, we know. I will never give that way to you because I leave you free to counter trade my ideas. But there are people that feels like selfish and they like to do their way, to say their number, especially on crypto Twitter. You have full of people saying, no, it's going down, or tomorrow it's going up. And then when they fail their strategy, they close the account, they disappear from Sundays. While me, I say you what I think and I give you an option, but I give you also the other option because we don't know. We have two options. Here the trend is up. So the percentage to have an uptrend continuation now is 80% because we don't have a downtrend. We don't have a reversal yet. We can have a reversal here. So I will activate my alarms here. But earlier, I'm waiting for signs to counter my strategy, but I cannot bid that we are going to 9K if we are in an uptrend. I have to be honest with you, with mine, and with my strategy. The green candle here could be red and engulfing this green tomorrow. Until I don't see for the next 23 hours the closing candle, I will not know. If you look at this green that we closed yesterday or just 5 minutes ago in this case, it was red down way here to 43,834. So it closed green. You have to look at when a candle closes, not when it opens. Now it's opening green. It could go green up hold the day. Of course it could. But it could also do something like this. Go green for a while and get red at the closing time tomorrow. So I will be here. And being here will be still in line with my blue line pointing here because I can still reach this point. And I'm still in that red rectangle, which is no buy zone. And also think about what you do zone. As you can see, the candle is now red and we are on daily time frame. If we go to hourly, we can spot tendencies. The hourly time frame is useful in example to see that here we have another seahorse. Seahorse 2 times is a bullish pattern. So probably this will resolve up and will follow this line that is here. Probably, not surely. But seahorse is generally a bullish. Look, seahorse, seahorse, seahorse. But seahorse here, the horse lost the head and crashed. So it could repeat this move. Let's see. We will see after the evolution of these candles. The only thing we know now is that the uptrend is confirmed from the part of the low, here, from here. The black swan pattern here is still there. It is not applying the necessary pressure because it could have been, this sign, the driving path was to go down. So the real yellow black swan has paid at the moment the appliance because it should have been doing this kind of move. Black swan actually they're failing. We will see because it could be something that goes down fast and we reconnect to it. So let's wait for him. We will go for him tomorrow or in a couple of days. The three tribes here, the cyan line, is here. And if it materializes, I will have a higher point to consider upper of my golden ratio rectangle, that is this one where it should start the fall. But since anyone is expecting the fall here, me being a market maker will start the fall here, at least until here, where the bull would continue because of the trend line here. So this is just a matter of calculating all the options. Don't leave the bearish one, don't leave the bullish one, because both are valuable to think about the strategy. If you just see bullish, search for bearish, always, because you need to have both views and to follow both options here. If you are able to do that alone, fantastic. But it's better that you compare your strategy and your charts with other people doing the same, and maybe they are doing bearish because they call 9K. Okay, in your chart there will be the 9K, but you will not bet for your 9K. You will just wait for confirmations. And confirmations are not no actions, are these kind of rectangles. Here, there's my life. I have where to sell, I have where to buy if we go long, or maybe where to buy here, up out of this box, and also where to short if we go shorting here at the maximum shorting risk that I want to take. The best one is here, not so much risk.